requirements are there all over. Business is all over there to take. We just have to approach. That's all. And the idea of this session today is to prepare you to, so that you can go ahead and do that right inquiry at right set of people and communicate to them the right message that we have the strength to address it. That's all, Ravi. I think we have one more person joined, so Darren is also there. So let's begin.
Okay. Okay. Thank you, Kedar. And hello all. We're going to discuss today about IFRS 9. So before we do that, let us try to understand what the solution is, why the requirement has come up, and how important it is for any bank or financial institution who get involved with assets or who create assets in their business portfolio to earn a profit. When I say IFRS, it stands for International Financial Requirement Standards, which is nothing but, if I give you a small example, this is a very complicated topic, okay? Let us try to use as many as examples as possible for today's discussion to understand this topic. When I talk about accounting, we have journal, we have ledger, we create balance sheet, profit and loss, everything. If you look at any balance sheet, it is the concept of assets and liabilities. Liabilities are shown on the left hand side, assets are shown on the right hand side. But there is no such rule so that the liabilities should reflect on the left hand side and assets on the right hand side. It could be vice versa also. But since we are talking about a concept which is universally accepted. Sorry? Is there a question or something? Jugami, is there a question from your side?
So maybe you can mute
Hello?
the team.
Yeah, I did order.
Muted. Okay. Thanks, Soumya. Okay. So I was talking about the concept of accounting principles, wherein if I look at a balance sheet, assets reflect on the left hand side, liabilities on the right hand side. But there is no such rule, but it is the concept of principles which is universally accepted. Majority of the people follow the format. So we call it as generally accepted accounting principles. And when you come across any document or requirement, you might see the word like GAAP, GAAP, US GAAP or GAAP likewise. So it is a concept wherein majority of the people follow a certain standard to report their numbers or to prepare their financial statements. On the same concept, we are going to talk about or try to understand how IFRS reporting is done and how relevant it is and what is the step forward going ahead or the importance, I would say, in terms of Basel 3, Basel 2 and now IFRS. Before I go ahead, I want you people to share your views how you place IFRS as a requirement, because so far we have discussed about multiple solutions here: performance, risk, compliance, and the customer insight also. How do you see yourself, or how best you can place it, looking at the structure what is being presented in the current slide now? Is it under performance, is it under risk, is it under compliance, or what it is? I want the views from you people to start the discussion.
Yeah, Jugagni want to tell something. Yeah, please go ahead.
Yes.
Yeah, we do it on the risk only.
Okay.
When you speak to the risk department, or when you speak to the concerned risk person, you just ask him like what are your thoughts on IFRS 9, or have you implemented IFRS 9 already, or has the bank implemented IFRS 9 already? And then like if we can start on with it, then in the next level together, I mean then it goes fine.
Okay, very good, very good. When you have pointed you have given some key inputs to the discussion now. Anyone else who
Yes,
would
Santanu
like
want
to
to
add up?
add. Santanu, please go ahead. Santanu, please go ahead.
Santanu, are you able to hear us?
Santanu, hello.
Ravi, I
Yes,
suggest
please.
you repeat the question. I don't think
Okay.
everybody has got the question.
Okay. So before we go ahead, I wanted to get views from people or the attendees what they think about IFRS as a solution or as a requirement, and how do we place the solution in terms of OFSAA categorization. Is it under performance or risk or compliance or customer insight?
Yeah, Christian want to add something. Christian,
Yes,
please.
Santanu, please go ahead.
Christian,
Santanu
please
looks
go ahead.
offline.
Yeah,
Christian.
Christian want to add something. She just raised her hand.
Yes, Christian. But you need to unmute her.
Yeah, I already did. Christian?
Hello?
Yeah, hi, Christian.
Yes,
Please go
Christian.
ahead.
Yeah, hi, good afternoon, guys. Rabi, just to clarify, you are asking where, I mean, for in terms of the IFRS, where is the categorization in relation to the suite of products, right? And how do
Yes,
we observe?
exactly.
Okay.
Yes.
I think for me, I mean, personally, I see it, given its, acronym, International Financial Reporting Standards, I think it has to go under the compliance. Because when you said a while ago that generally accepted concept or principle, because when you say principle, it has something to do with being compliant to some rules and regulations. So when you have a standard that you need to follow, then you also have to, to comply to that. So I think just for me, in terms of where it belongs in the suite of product, I think it has to go to the governance and compliance. I mean, that's just my thought on it.
Okay. Very good, Christian. Appreciate your thought. Anyone else, please? So Jugagni highlighted this to be on the risk management category, and Christian highlighted it needs to be on compliance, and they have validated their points. So anyone else, please?
I think I also agree with Christine, because if it's a standard that has to be followed, then it has something to do with compliance.
Okay, okay, okay.
Yep.
Nice, we got 3 inputs. Okay.
My understanding is it's coming under ERM.
Okay, yeah. Okay, Sayed. Perfect. We have classification under risk management and compliance as of now. So let me give you a brief of how best we can place it. Okay. Before that, we always say it is IFRS, and there is one product suite also, IFRS reporting and hedge accounting and LLP. To confirm, when I talk about IFRS 9, the bank can comply with OFSAAA LLP solution. LLP stands for Loan Loss Forecasting and Provisioning. If you look at this particular segment, this is the module which is implemented across banks to meet the IFRS 9 reporting requirements. And before I answer the question or we clarify on the categorization, let me give you a brief so that it will be very clear to all of us saying what it is all about. and how best I can place it. Okay, this is the background. Okay, it is going to be a very storytelling concept today. It is a very important concept, and it is very interesting to understand also what is the background of it. It all started with 2008 global crisis. We all know about 2008 global crisis, right? There were multiple assets or bubble assets, I can say, which has been created. The intrinsic or the collateral value was less, wherein the face value of the loan amount was pretty high, and the stress level was not competent enough to meet the regulatory requirements. That was the basic reason why the crisis started, and few banks collapsed also. The major or the one of the major banks which got collapsed was Lehman Brothers. They had very much exposure to the real estate sector at that point of time. What happened is, till 2008, the committee, they used to think, okay, to analyze a particular customer or to rate a customer, let me take the historical data maybe for the past 7 years, maybe 6 years or 5 years on a regulatory basis. I used to analyze those data, and I used to say, okay, which customer is good enough or which bank is good enough, which is creditworthy. But the real challenge happened was, even though I'm a good customer for the past several years or past several decades, it may not be the case point in time. Please remember this word, point in time. IFRS only reflects to point in time. What IFRS says is, I may be a good customer for the past, but I need to be valued at the current position or what I'm standing today. I have to reflect, the bank has to see the current cash position, the receivable and the payable, the obligations position as of today, point in time. That is the concept of IFRS, and this is the way differentiated between IFRS and Basel. Basel used to take, your credit rating, probability default, everything gets computed based on your historical data. IFRS doesn't go for that. Every month, every period, there would be a appraisal of your credit rating. That is based on your current book, current balance, and what kind of sectoral exposure you have entered into. That is the beauty of IFRS. I will not go to the historical data. I will appraise you based on the current situation, what you are going through. Is it clear? This is a very important point I have explained now. I hope we all understood this. If not, please let me know.
Ravi, I have a question. This is Nazar.
Yes, sir.
Okay. No. So, is this an extension of Basel, or this is a separate topic by itself?
It is a correlation, I can say, but it is a separate subject or area altogether, because as I said, Basel takes into account till now also, Basel 3, your historical data into picture to compute your probability of, PDLGD, everything. But in case of IFRS, it is all about computing fair valuation. It will happen on the current structure of yours. So I would say it's a separate structure, but yes, I could do a correlation. That's it.
Okay, but IFRS 9 is not this to BCBS, right?
No. Any other clarification queries? These two have to be reported separately, sir. When I do my regulatory reporting, for Basel, the reporting will happen separately. For IFRS, the reporting will happen separately.
If you allow, if I add to what Mazhar was asking,
Yes, please.
You can validate what I am saying, right? See, I think the Basel requirements are to make the bank prepared in case of asset quality versions. For example, the situation of Lehman Brothers should not come again. So they should have right amount of capital available with them. Calculation of that.
Yes, the provisioning should be higher.
Prepared for worse condition. Right?
Yes.
Where in IFRS 9, is across, is about making your accounting practices reflecting the risk in business, which was independent. The purpose to different purposes. For example, uh, even though if you are keeping some buffer capital or risk capital, is the situation which when the asset quality goes bad, but your accounting that year say financial reports would not be showing it. They would be showing that bank is in very good condition.
Yes.
So right now what they are asking is whatever your asset related worries are there, it should get reflected somehow in your accounting or reporting also. Am I right?
Yes, because accounting, it is all about historical data, the transactions which has already happened. But IFRS, it's something about a futuristic approach, wherein what might happen and how prepared are you to face the risk. This is the difference.
Okay, so my question is that basically kind of, if a bank has got a Basel 2 or a Basel.
Yes, sir, your voice is breaking. Can you repeat your question? Hello? Hello?
Hello, 1 second.
Yes?
Yeah, my question is that in case if there is a central bank audit, okay, and the bank says that I have an IRB model for advanced approaches for Basel III credit risk, etc., and but they don't have an IFRS 9 solution, can they get away with it, or they have to have an advanced approaches for Basel III for credit separately and IFRS 9 separately?
That has to be maintained separately, sir, as of today.
Okay. So this is a good opportunity for us for both Basel.
Yes. The reason being, as I said, Basel again, it is all about on your historical data. IFRS about a futuristic approach. There's a major difference. What might happen and accordingly how best you have done the provisioning.
Yes.
Okay, Santanu want to
any
add
other thoughts, please?
Santanu, you raised a hand. Santanu and Jayanta.
Could you hear my voice now, Ravi?
Yes, loudly.
Yes.
Okay. Sorry for the last question. My mic was not connected properly. So I just wanted to know whether this IFRS 9, is it a subset of EPM and ERM? Like as it is shown in loan loss forecasting, it comes as a subset of both EPM and ERM. And what has it to do with IAS 39 migrating to IFRS 9? Like, is it a new accounting standard?
Yeah. Okay. So this too, the first question of yours will be answered because Syed, Christine, everybody, they have given the views wherein few said it is under ERM, few said it is under compliance, and now you have a viewpoint saying it is a subset of these three modules. Okay, I'm going to answer that. And about your second question, a comparison of IAS and IFRS, I'm going to cover it in the coming slide now. Okay, Santanu?
Okay.
Okay. Yes, Jayanta.
Jayanta, please go ahead.
Yeah, sorry. Hey, Ravi. Hi.
Yes. Yeah, hi.
Yeah. See, my question is now, you said IFRS is more onto futuristic approach, right?
Yes.
For you to be futuristic, you need to have some, historical data or maybe, some data, pertaining to some kind of timeline. So what is that, inputs IFRS, the procedure takes? Does it take 1 year financial data, 2 years financial data? What is the basis?
I have used a particular phrase, point in time. Okay. In IFRS, it is always about point in time. What I am today, no historical data.
Okay, so how do we ascertain where we are, where we stand right now? There has to be some base for that, right? So how do you ascertain that?
So that is where we, implementers come into picture, wherein we design the model in the system itself to calculate the probability of default and assign it or, assign it to all the accounts or to all the exposures so that I get my fair valuation. I get my fair provisioning amount.
Okay.
So it is basically you opened an account, okay? The account got disbursed this month itself. While I fetch the data, I will assign a PD straight away, not on the historical data, based on what the current customer rating is.
Okay.
And the kind of model to be prepared, it is again a dynamic question to be answered. There is no definitive model, guided by the regulators as of now, depending on how best or how accurately you can do a provisioning depends on your rating, the customer rating, or the sector you have exposure to, the geographical location, everything. So it's a combination of all these things. You create that model in the application itself and combine with the exposure so that you get a fair evaluation.
Okay. Yes, I got it now. Yeah.
And at the end of the session, I'm going to share across one Excel sheet. I have prepared a use case also. You can go through it, which will give you a fair level of understanding of how best we can, or how we, accommodate the IFRS 9 requirements in LLFP module.
Mm-hmm.
Okay. Anyone else, or shall I move? Go ahead.
Ravi, hi, Darshan here.
Great, Darshan.
Ravi, is there a sequence of procurement for any bank? Like if there is a new bank which is coming up, is there a sequence that Basel should be procured first and then IFRS, or is there something like that?
Very good question, Darshan. Very good question. So, if I talk about IFRS, I need the cash flow data for all the instruments. And now tell me, guys, how I can, or with the help of which module or application in OFSAAA I can generate cash flow. We discussed it in our previous sessions. We spoke about ALM. Exactly, Jugani. ALM will help me compute the cash flow. I will use the output of ALM as an input.
Okay.
If I want to implement IFRS 9 on LLFP, ideally I should go ahead with ALM. I will fetch the source system data, the contractual data, raw data. I will compute the cash flow and feed it to LLFP in an automated way. Second thing, if the bank doesn't have enough budget to go for ALM and LLFP together, in that case we will request the bank to give us the contractual cash flow as an input so that we can directly feed it to the LLFP application. Third scenario, if a bank has a particular ALM engine from some other vendor, we can use that output as an input in OFSAAA. In that case, I will only be positioning LLFP. These three scenarios can happen. This is a very good point, Darshan, from sales point of view. I hope everybody understood the concept of this one.
Yeah, I think Ravi, you need to repeat this, these three scenarios which you mentioned.
Yes,
okay.
You need to repeat it.
Okay, so let me start with the first scenario, wherein it is a new bank. They do not have any analytical solutions, and they have good good amount of budget available. In that case, I would propose them ALM and LLFP. ALM will help generate the contractual cash flow and feed it to LLFP as an input. First scenario is clear, guys?
Okay.
Why cash flows are required?
That is an input required by LLFP application itself. The data model is designed in such a way, I need cash flow data to go ahead with the system configuration and model configuration. This is a mandatory part.
And in case of, okay, you complete first other two scenarios. Then we'll ask.
So this was about ALM and LLFP. Second scenario, bank has some other analytical solution or ALM solution. I can use the output of that particular solution, the cash flow, as an input for LLFP straight away. I am saying outside ALM engine integration with LLFP is also possible. Third scenario, if there is no other analytical solution in the bank, they only want to go with LLFP, then I would request the bank to provide contractual cash flow as an input straight away to be used in LLFP. Yeah.
So just to put it in whatever I have understood from this, Ravi, in any case to implement IFRS 9, what we need is contractual cash flow data. Whether it comes, you can take my ALM engine, it's okay. If you have another ALM engine, that's also okay. If you don't have ALM engine, you furnish from wherever you can, you give it to me.
Yes,
I will
exactly.
give you IFRS 9 reports.
Yes, yes.
The other portion of your question, Darshan, so it actually shows that it is indifferent, it has no connotation from Basel compliance. You can implement your Basel compliances separately. IFRS is a mandate which has a timeline. You need to implement it. What you need to have is contractual cash flow data, and these are the three methods to get it.
Okay, I get it.
I got it, right? Right, Ravi?
Now, yes. Now, based on this discussion, I come to the conclusion of my first question. How do I categorize, or where do I place LLP as a solution in the OFSAAA broad category? In short, it would be coming under risk management, ERM, because ALM also under ERM and LLP is also going to be covered under ERM. Yes, somebody has a question, I think, Soumya?
Yeah, Ravi, this is Mazhar.
Yes, yes, sir.
Okay, Ravi, the question is, I mean, as you're saying that, kind of this is more like an extension of the ALM itself. So in case if the bank got and say a SunGard ambit, or if they got a PI.
Sir, I am missing your question. There's a lot of fluctuation in your voice.
Okay. The thing is, in case if the bank has got, as you said that, this is more like an extension of the ALM. Right?
Sorry, sir. I'm really very sorry, but I'm not able to hear you properly.
One second. Can you?
The status is the same, sir. Kedar, are you able to hear Mazhar, sir?
No, I'm not.
Mazhar, maybe you can type your question then.
Yes, that would be an ideal way. Sir, if you could type your question. Or else if you could, send the message over Skype also, we can see that, and I'll be able to answer your question, sir. If IFRS is an extension of ALM, then the ALM solution.
Sir, I think we should go ahead.
Okay. Sir, I never said IFRS 9 is an extension of ALM. What I'm saying is the output of ALM, the cash flow, contractual cash flow, is required in LLFP. If it is OFSAAA ALM, we can do a system integration, automation can happen. If not, I can take the contractual cash flow from the bank instead of, irrespective of whether they are using ALM solution or not. If they have SunGard ALM or 3i Infotech ALM or Surya ALM also, I can use this contractual data for IFRS, for LLFP. But it is not an extension of ALM. Hope the query is clear, sir. Okay, thank you. Anyone else has any clarification to or any suggestion on this, what we discussed now? Yes, please, Christian, go ahead. Can you mute Soumya?
Okay.
Can you mute?
Rabi, hello?
Yes, Christian, go ahead.
Okay, Rabi, just to clarify, to make sure that I got everything correct. So you mean the bank has to has an ALM prior to them getting into the LLFP or any contractual cash flow data. That's the requirement. That's
Yes, the bank need to have the contractual data, whether it is maintained manually or from any analytical solution.
From any other, yeah, from any other solutions.
Yes, because for LLFP, contractual data is a must. So go ahead.
Okay. Okay, that's all. Thank you, Rabi. Thank you.
Thank you. Anyone else has a question, Soumya?
Rabi, I think you go ahead.
Okay. So guys, it is easy topic, right? Or any clarification? Because this is the entire crux we are discussing in the first slide itself. Then I'll come to the second question of Santanu.
Rabi, one sec.
Yes, Ankit.
Rabi, this IFRS 9 is basically used by the financial department of the company more than the risk. Correct me if I'm wrong.
IFRS is a regulatory requirement.
Right.
So it has to be by the risk team itself or the team who is doing the regulatory reporting. Just like your LRM or Basel, the same team is going to handle IFRS also. The risk team basically.
Okay, thank you.
Okay. Anyone else? Any points to discuss? Okay. So for now I'm going ahead. Please stop me if you have any questions to discuss. So this is a theoretical international financial reporting standards are designed as a common language. As I said, it is a universally accepted principle. Now, if you come to the last bullet point, Santanu, it answers your questions from here. IFRS is sometimes confused with IAS, International Accounting Standards, which are older standards that IFRS has replaced. Now, if you look at IFRS, it has certain number of guidelines under each section. IFRS 1 has related to financial reporting, 2 is share-based payment. Now, IFRS 9 is related to financial instruments. When I say financial instruments, let us not get confused with only loans. It could be borrowing also. So with IFRS, I can account for both assets and liabilities of a bank. Whereas in Basel, it was always about assets. This is one of the biggest differentiator. Even though you talk to bankers today, there would be confusion saying we are going to report only the loan exposure in IFRS compliant manner. But it may not be the case. If the bank wants to, they can go ahead with including term deposits like liabilities also. Now, IFRS 9, as I said, it is effective from 1st of January 2018, is similar to IAS 39. That slide is not available here, Santanu. So likewise, there are so many IAS requirements also, right? Till 2008, IAS 39 was prevalent, which was replaced by IFRS 9 now. Is it clear now? Santanu? Okay. Okay. For now, if I talk about any bank, okay, Christian, earlier till 2008, we used to follow the IAS set of reporting standards. IAS 39 was related to financial instrument. When IFRS came into picture, IFRS is nothing but the upgraded version of reporting standards from IAS. So IAS 39 is similar to IFRS 9. Both are okay, but IFRS 9 is the upgraded guidelines, and IFRS 9 relates to financial instruments, and it is not only limited to assets, it can be covered for assets and liabilities. Okay, perfect. Now, the challenges for banks should be, if you look at my earlier presentations, I have kept challenges at the first slide, but since this is a new topic, I wanted you people to understand, visualize what is IFRS 9, then take into consideration what are the challenges. Is it limited to banking book only? Sir, it can be banking book, it can be trading book as well. Because if I talk about a trading book, it can contain treasury dealings like money market transactions, which is a overnight dealing also I can take into consideration for IFRS 9. It is both trading book and banking book. Yes. Okay. Now, the challenges for banks and financial institutions. New regulation on classification and measurement of financial instruments. So, if I say what is classification? When I say, okay, let me start this way. There are multiple methods of tests available under IFRS. Okay. The first step being classification. The next one is measurement. We need not get into those steps now because that is more of a implementation discussion. But the challenge for banks is, how do I do a classification and measurement? For this, we have inbuilt methodologies available in the application, which, with the help of which we can set our parameters, we can create a threshold, and accordingly we can do classification and measurement of all my financial instruments. Regulatory reporting related to IFRS, with the help of this solution we can do it. Forecasting out fund flows based on actual numbers. This is a very generic discussion. I can start with ALM and I've included the same for IFRS also. Now, in IFRS, another important aspect is, it is not only, you compute your fair value computation, you do right amount of provisioning. I can create two set of runs in the application. One is for the actual numbers with actual set of provisioning for computation of fair value. The second one would be a adjustment rule, wherein I can create multiple scenarios also. Because when I talk about analytics, it is not about as it is reporting to regulators. Apart from regulatory reporting, I can create certain adjustment rules or adjustment runs based on which I can create some positive and negative scenarios also to check what might happen in the future, and accordingly I can take corrective actions. What can be corrective actions? One simple example is, I have given an unsecured loan to one customer. I predict, depending on certain market scenario, this customer might default in the next quarter. So before that account turns out to be bad, I can request the customer to give some collateral, or I can do some other arrangement, or it might so happen to not include it in the provisioning. I might sell the loan also. I can do securitization. Securitization is nothing but sending of loans from one bank to another bank. I can do this kind of adjustments also to clean my book. Complexities due to different product profiles. As I said, as a bank, I deal with different products, and the features, characteristics of the profiles of each product is different. How best I can handle it in application itself? For LLP application, for each product I can design a model. For each account also I can design a model, depending on how the bank wants to configure it. So these are the challenges, and I can address it through LLP solution to comply with IFRS 9 reporting requirements. Any questions? Okay. Now, these are some of the sample reports through LLFP I can generate which is IFRS 9 compliant, like trend analysis, transition metrics, comparison, stress test reports, loss forecasting, allowances, impairment, everything. And these reports are just an example. Out of box there are 2-3 reports which is coming out of LLFP solution, but we can generate the reports or design the reports based on how the customer wants to. So this was a very important discussion today's training. It is a very important module or subject area. So I want you people just to clarify any simple question also. Let us try to discuss it so that everybody gets a fair level of understanding on the subject. I have not gone through deep into the subject. I wanted to make it as simple as possible, and we are discussing in that aspect. Please let me know if any one of you has any doubt. It is basically, when you say IFRS, it is coming under ERM. When you say IFRS, it is basically a regulatory requirement which is going to be effective from 1st of January 2018. I'm sure the deadline is going to be extended again next year. And it is about, we spoke about, how do we place solutioning, IFRS solutioning in terms of licensing, only LLFP or ALM LLFP or any other ALM engine with LLFP. We spoke about the classification measurement aspect, not only limited to assets, we can include liabilities also. And we spoke about it is not only the actual numbers, we can create multiple scenarios, adjustment scenarios. We can see both the reports at the same time for the same set of data. So if everybody has a comfortable level of understanding, then we can go ahead with the test, or if anyone wants to discuss something, we're open. We still have time left. Manoj, you want to add something, please? Yes, please, Manoj. Santanu, Soumya, can you mute Manoj, please? Unmute.
Hello.
Already unmuted.
Yes, Manoj.
Yeah, Ravi, yes, it's on the IFRS 9 with the new regulation and the deadline for 2018. There have been some discussions around, and we understand that from an Oracle product perspective itself, are we completely ready to address the IFRS 9 in the LLFP? Or is there the specialized consulting or models that need to be derived and can be as a value add or a unique differentiator that we can put across to our customers?
Okay. Very good one, Manoj. For specific, if I want to be very specific for IFRS 9, it is a combination of consulting wherein we need to design the model, then replicate the model in the application. So it is going to be a combination of consulting plus implementation, because not many banks are aware of how best it can be dealt with.
Okay.
So it is going to be a combination of both, consulting plus implementation. Few big banks, they go ahead with consulting from one firm and they give implementation to other firm. So we are open for both ways.
Yeah, just to add on,
just to
add, I think Ravi has rightly said that what you are anyway aware that we have a very good product and we have an implementation ability. Beyond that, what we are offering is a consultancy services, because right now nobody is really sure how to apply these classifications and measurements, etc. Right. So let's go and pitch it with as an end-to-end proposition, which is consulting, product, and implementation. Right. Suppose if the bank decides to go for independent consultant, still it will help us to create a good impression in customer mind that we have a very good domain-centric ability. And the second differentiator, I think, on the product side, if you see, as Ravi already said, now it requires a lot of data, which is OFSAAA Suite can provide. For example, ALM engine, right?
Mm-hmm.
There are other solution providers. Maybe say if you say SunGuard and all, yes, they are very similar to us. But there can be some other solution providers which can bring in only IFRS 9 solution, LLFP kind of a solution. Therein we can differentiate, definitely saying that what you are looking at is a risk adjusted performance, and it requires a lot of risk data and contractual cash data as a plugin, which as a solution, as an integrated data model, OFSAAA as a solution offers. This requires not only your today's requirement, but tomorrow, day after, we can create some fear in customer minds in the tomorrow, day after, things are going to be little more difficult, 10 other things customer is going to, regulators are going to add into it, right? So it is going to be difficult. So you need to go in the beginning itself, a solution which is scalable and which is taking care of your enterprise data, which is OFSAAA, right? That's how we can drive and influence the customer to towards us as a solution also, and as a end-to-end offering also.
Okay. Okay. So if I may say that the positioning could be saying that we have enough domain expertise, we understand the IFRS 9 requirements, we have a strong team wherein we have built our own models and utilities to help the customer to fit in to the IFRS 9. Is that right?
Yes.
Absolutely.
Okay. Okay, I'm done.
Okay. Anyone else, please? Because after this solution, I believe everybody is going to be an expert in OFSAAA.
I see. I have a personal feeling that whatever been presented is not really been received. Okay, I'm just feeling so. So I request, if there are any doubts whatsoever, even on the first slide which was presented, raise it. It can be repeated. It's better to understand. Maybe
Ravi, Ankit.
any slide.
Yes, Ankit.
I really need another session on this. I really did not get this session. I'm so sorry. Maybe I'll sit with you one-on-one on this. But if you can repeat, give me a what do you call, just a brief on what you will be very helpful.
Yes, we will certainly do that, Ankit. How about others?
I think we asked some question to them to break the ice.
Okay, sir. Your wish or comment, sir. We'll start at yes, Kedar.
Ankit, my suggestion, maybe if you can raise that till which point you followed and where did you miss it. If you raise that, maybe Ravi can repeat it, okay, so that everybody will benefit. If it is possible, you can raise it here itself.
Okay, if you can go to the next slide, Ravi. Okay, now when you actually gave this example of Lehman Brothers in the downturn, and you said that they were part of the real estate guys, they invested a lot in real estate. But I mean, how were they able to get into that stage? I mean, I want to again go there and find out what made them actually lose the complete control of their organization.
Okay, it was basically when you give a loan against any property, okay, what is the collateral? The property is the collateral, isn't it? And the property has a market value. But that was a situation wherein it was more of an asset bubble. A property of $100 was selling for $1,000. It was changing hands for 10 times. It was kind of a bubble which has been created. But end of the day, when the crisis started, when the banks went back to check what is the actual value of the collateral, it was much lesser than the exposure they were carrying in their books. That was one of the biggest examples. And as I said about Lehman Brothers is a world-renowned bank, right? They had a very good reputation in the banking circle. But that reputation was based on their historical data, their historical performance. In 2008, at that particular time period, they were really into crisis, but nobody thought they are going to collapse. That was the challenge. Even though I am very good for the past 7 years or 10 years, my current position is not good. That nobody looked into as a regulatory, aspect. Everybody thought, okay, it is a time passing by and things will be normal. But now IFRS says, I don't mind who you are for the last 5 years, 10 years, 7 years. Who are you today? Accordingly, I am going to do the treatment in my books.
Okay.
Anything else, Sanket? Anyway, we are going to discuss it, but this is the concept. So IFRS is nothing but point in time concept.
I think Jayanta and Santanu has raised their hands.
Yes, Santanu, Jayanta.
Go ahead, Jayanta.
Okay. Ravi, I just wanted to know, do you have any sample reports for us to understand how actually how the reports come out?
I'll share it.
Yeah.
No problem.
Okay. So probably that also might help the audience to, understand how the reports are, how
Definitely.
transparent and clear it is.
Definitely. I'll share across. Yes.
Yeah, Ravi.
Yes, Santanu.
Yeah, Ravi, as I was saying that since this is a regulated push, right, IFRS 9 is a kind of a requirement which is wherein it comes from the central bank regulation, right? So
Yes.
in Basel, it is said that the bank has to maintain certain amount of capital, like 10% of CAR. So that is the bank has to maintain anyways. So what in IFRS 9, is there a specific reporting or an accounting standard like these minimum criteria the bank has to fulfill and they are through with it?
No such thing. In IFRS, depending on your exposure, depending on your credit rating of the customer, you compute your provisioning amount and you do a fair value computation. Assuming you have given $100 to somebody, okay? He has repaid $10, remaining is 90.
Okay.
It is collateral backed, it is a very good customer and you don't do any provisioning for that. So what is your fair value? 90. But if at all there is any risk, what you say based on the rating or any other, changes, scenario changes, economic scenario changes, if you feel instead of 90, it should come down to 80, that means 80 should be the value what you should carry and 10 towards provisioning. So automatically your exposure came down, right? Your provisioning went up, your risk profile went up, and your fair value has come down from 90 to 80.
But your NPA goes up, right, in that case?
No,
Ravi?
NPA is a different thing. When you say NPA, it is like in India, if it is more than 90 days past due, you call it as NPA.
Okay.
But IFRS is something, before your asset turns out to be a NPA, you identify it or you take corrective measurement so that the impact is not more to you. It is a futuristic approach basically, but Basel everything, it was a historical approach.
Okay. Ravi, I have one more question. So what is why bank has moved from IAS to IFRS? What is the advantage of? Sorry?
Because of 2008 crisis, the new regulations came up. Because everybody was talking about, what a good person I am for the past 10 years. But what I am today, I don't know. Nobody knew. Or nobody accounted it in their books. That is why point in time, that is the concept in IFRS now. What I am today, accordingly, treatment would be done.
So there was some limitation on IAS, right? So that's why this has come into. Okay.
Yeah.
Okay, I got it.
Okay, anyone else?
Hi, Ravi.
Yes.
Hi, Ravi, can you just give us a difference between having a credit risk management solution and IFRS 9.
Okay. Credit risk management is a solution. It is only reflecting what kind of credit exposures do you have in a multidimensional approach. It is very different from Basel also. There is no, compliance related activity or regulatory requirement related activity you do in CRM. It's a plain vanilla product wherein there is a segregation of wholesale customers, retail customers, and you do your credit reporting. It is only related to assets. Whereas in IFRS, you do a provisioning beforehand, an event occurs depending on the point in status of the customer, and accordingly you do a fair value computation for your exposures. This is the biggest differentiator. Credit risk reporting, it is about reporting of actual numbers, what you have or what you are carrying as of today. IFRS is about on those actual numbers, how are you going to do provisioning, how are you going to compute fair value for your exposures. These are the difference.
So your credit risk solution is not helping you evade the risk.
Yes, I would personally say pitching credit risk solution is no way comparable to IFRS, because CRM is not regulatory, IFRS is regulatory, and value addition from CRM solution is not much, whereas IFRS value addition is much more for the coming years.
So if a customer is looking to basically forecast his exposure, so he will be basically going in for IFRS 9 rather than CRM, that is a credit risk.
Customer doesn't have a choice in this case. They have to be IFRS compliant. Again, as I said, balance sheet example, left side liabilities, right side asset. But if you give your report to regulator as assets on the left hand side, liabilities on the right hand side, bank cannot say no to your report. But it is nothing but a concept of universally accepted principles, the gap concept. Okay. So if you are not IFRS compliant as a country, I am saying as a country, as a geography, what will happen if out of 10 countries, 9 follow IFRS standards, one country doesn't follow, then definitely they will downgrade that company. Degrading will happen. Your country will go into an economic crisis. Whereas if your country, takes the resolution to be IFRS compliant, then regulator will compel
Ravi, are you able to hear us? Hello, Ravi.
Can it
Yeah, Ravi,
prevent
are you
another
there?
limit?
Definitely. See, what I have seen in the market as of today, what has happened in the past, the same thing is not going to occur again. But the risk will definitely come up in a different way, which people have not seen. That is the beauty of market. So for now, we have seen something, and accordingly we are trying to comply with something. You never know, something might come up, and this will keep us busy selling new solutions or implementing new solutions.
Okay, so if I understand correctly, IFRS 9 talks about exposure to the customers. What about interbank exposures?
Again, when you say interbank, he is also a customer to you, right? You are a bank, I am a bank, I am lending to you, or I am borrowing from you. You are a customer or counterparty to me, isn't it?
Okay, so that is
But
also
usually banks, this kind of risk reporting is very less, because depending on the standard of the bank, you set a limit internally. I'm talking deep into the treasury subject now. There is a limit management concept in treasury wherein Soumya Siddharth Raut. Soumya is in a hurry to close the session. Sorry, Soumya, I cannot do that.
No, I'm
Okay,
not.
we'll do that, sir.
No, I'm not.
Okay. Basically, what happens for limit management in banks, I do a credit risk assessment for each counterparty and accordingly set a limit, and accordingly I get into interbank deals. So that is a separate subject altogether. But it is all about external customers now, if I say IFRS. But yes, you can include money market transactions also.
Okay, great. Thanks, Abhi.
Okay. Anyone else, please? Any open item? We discussed so many useful, topics here. Okay. So since everybody is.
Sayed, your view. What do you say? Anything that you want to say?
Sayed is, I guess, digesting today. Still
No,
not
our
yet.
senior
No,
member.
I'm just grabbing the points. Being new, I'm just understanding more. Maybe when I get into a discussion with the customer, I need to bring Ravi or Kedar so that I can learn from bank and also from our consultants. I'm just grabbing the points.
Yes, sir. Please do that. At least that way I'll justify my position also. Okay. So now let me comply with Soumya's requirement to start with the poll. Okay.
Ravi, just one last one. I'm so sorry. Hang on.
Once started, I cannot stop. Sorry. After this question, we'll take it up, Pankaj.
This is easy one, yeah.
Yes. But still, there is a lot of confusion. Why?
There is no. This is not a. There is no right answer to it.
Okay, fair enough. We got 80 plus is always I'm happy with, no problem. Okay, let me start with IFRS questions now. Please try to think about it, then answer. Okay.
IFRS is not designed as a common global language.
Is the question incomplete?
That was very big question. The system can fit that much. So.
Oh, come on, Soumya. I don't say this.
So the first question should have come after this question.
I gave questions in an Excel format. I'm sorry guys, I was not aware of it. Anyway, I'll share across the questions what I've prepared Excel sheet.
Just remove the
Now somebody saying true.
Good influence, Ravi.
See, I'm talking both ways, okay? So nobody can take an input from my lines now. But Soumya has a very good, explanation. Since the question was long, it could not fit it into. Good one, Soumya.
You can remove the IFRS full form and from that question and place the entire question.
I'll share it across, Ankit.
Okay.
Okay.
Repeat.
The question is IFRS 9 classification is rule based, yes or no? Okay. The last one. This is, I know this is something we have not discussed. This is a bit critical question. But as we discussed, IFRS is all about computing your future expected losses. That is the main motto of IFRS 9. You do a futuristic approach to see if at all you are going to incur any losses out of your exposures based on customer default or any economic crisis or any other challenges. Okay, not everybody is voting for this. Okay, fair enough. Yes, I think I have covered what was to be discussed for IFRS on a introductory level, and I hope it was useful for you guys to understand the subject, and you can approach us anytime, be it with the customer interaction or to improve your understanding on the subject. We can have a one-to-one session also, or for any other query update on IFRS, please get back to us. And please let me know for any other queries you have. Otherwise, we are going to end the session.
Guys, we have a test and feedback session also there. Kindly join there. So, Ravi, can I launch the test?
Yes, please. You go ahead, Soumya. I'm done for the day.
Okay. Okay, guys, you have 10 minutes to 10 or 15 max 15 minutes to all the best. ये अभी क्या था फोन था
Soumya, somebody has raised your voice. Just check. Soumya. Mother, sir. They have something to ask you. Soumya.
Yeah, Ravi.
Somebody has raised the hand. Just check with them, no?
Okay.
Unmute them, please.
Yeah, I already unmuted all. Major, yeah, tell me. Are you able to hear? Yeah, Adrian also has some. She also raised. Adrian.
No questions from you. No question from me.
Okay, okay.
Can I? We have to stay in the meeting or can we leave?
After test over, there is a feedback also there. Kindly fill the feedback. So it's also gives more idea to survey better.
Darren, you had some request to make. You said in chat.
Yes, please. I just want to request that can we get the slides that you shared during the training after the session?
Soumya is going to share across with everybody.
Pardon?
Soumya is going to share across the PPTs, the materials what you have discussed during the training programs with everybody over mail.
All right, good.
Darshan, are you able to go to
Yes, this transaction is one of the two ways of assessing loss, launch.
so you're able to go to the next one. Hey, Soumya. Soumya. Hello, Soumya. Is Soumya there? Ravi? No one.
Yeah, Matthew, tell me.
And then like yesterday, same thing. I did not go to the second page.
I don't actually I don't know.
You don't know, then figure it out. Why do you expect, huh? I'm telling you, yesterday the same thing happened.
No, Matthew, we already sent the mail to Citrix team, but unfortunately we didn't get any reply from them. I think
Yeah,
better
well,
we
this
call
one,
them today and just
yeah.
update them about it.
Okay, fine.
Sorry for inconvenience caused.
you.